Hello and welcome everyone to the Gold and Silver Club end of week commodities review for the 24th of October 2014, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an end of week summary for the commodity markets. We'll be looking at the top trades of the week. We'll of course be covering live market commentary and technical analysis. We'll also look at the week ahead, so the key events looking forward, and of course we'll be answering any questions you may have too. So the major fundamentals this week has been gold price hitting a 6-week high on demand from Asia during the lead up to India's Diwali festival, which is the country's biggest gold buying occasion of the year. Since the start of the month, gold has risen 6.17% from a low of $1,182 an ounce to reach this week's high of $1,255 an ounce ahead of the Diwali celebrations. According to the World Gold Council, India is predicted to import 850 to 950 tons of gold this year. Elsewhere in the energy markets, oil prices rose on Thursday after it was reported that Saudi Arabia trimmed production in September to boost the market. Saudi Arabia cut crude oil production by 328,000 barrels in September to a total of 9.36 million barrels. On the news, WTI advanced 1.84% to trade at $82 a barrel, whilst Brent crude oil surged 2.51% to trade at $86.84 a barrel. Meanwhile, soft commodities have continued to outperform this week. On Thursday, wheat surged 0.9% to trade at $5.27 a bushel, its highest price since early September. This pushes gains to 11% for the month. Corn also booked gains. The December contract increased by 1.3% on Thursday to trade at $3.57 a bushel. Looking ahead, the major focus now is certainly on Wednesday's FOMC announcement, when the Fed is expected to make history by ending its quantitative easing program, which will also present traders with a highly lucrative trading opportunity across the financial markets. So before we get started and take a look at the technicals, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications who've appeared frequently on financial television. Okay, so we'll just take a look at the gold price at the moment. We're currently trading at $1,232 per ounce. So we'll take a look at the technicals very shortly. The top trades of the week using the Gold and Silver Club signature trading strategies as follows. We had a lovely opportunity to trade a breakout this week on wheat. A buy opportunity, 140 points profit there, 70 points risk for 140 points profit for a 2-to-1, so $700 to make 1,400 US dollars. WTI crude oil, lovely breakdown this week as well, following a very strong trend at the moment. The risk on the trade, just for a quick day trade, was a 75-point risk, $750 risk for a profit of 250 points, or $2,500 for a 3-to-1. And gold as well. So we had a risk on this trade of 90 points for a profit of 210 points, as we've sold off over the last couple of days after a very strong rejection candle formed at resistance for 210 points. So we'll just take a look now at the technicals, and we'll just move over to the markets. We'll start off with natural gas at the moment. So natural gas looking very interesting. Natural gas starting to break down now. If we actually go out to some of the higher time frames, we can see this very clearly. Key level of support 3.723 breaking down here, and we've got a lot of confluence here across higher time frames. But if you just take a look at the daily, we're breaking down quite nicely. Next key level to break here at the moment will be 3.674, and we'll be looking for a move down to 3.589. You can see very clearly how this support zone is starting to break down. So natural gas, I would say, definitely a top trade of the day to keep an eye on at the moment. We're just waiting for a breakdown now in price on this key support zone. And in fact, we'll just have a look at that, some of the tighter time frames as well. Yeah, we'll certainly be taking a look at that this afternoon. So the natural gas, definitely one to watch. Also, we'll have a look at light sweet crude oil. So light sweet crude oil breaking down as well. If we just take a look at the larger time frame for light sweet crude oil, we can see, of course, we've got a very strong downward trending channel. We're still not breaking above. We're getting lower highs still. Each retracement is causing a lower high to develop. Very clearly, we're looking now to come down and actually break through the next support zone here, which is going to be just the lows here of 79.14, the next key level to break as we go into next week. So this key zone of 79, if we can break that next week, we'll certainly see more downside. On the flip side, if we can just we need to really get above these swing highs here in order to see more upside for the oil market. So it needs to really get back above 84 for light sweet crude oil. If we have, in order to get any more upside here, if we have a look at the Brent crude oil market, we continue to consolidate actually sideways. Still, we have a downward trending channel. We can see here quite clearly a level of resistance and a level of support to break. So a break above 87.50, this zone will lead us to start getting some bullish momentum here to the upside. We'll be looking to target the next key level around about the 89.60 level for a 200-point move on a breakout. If we break below 84, we'll then be looking to just have a breakdown of a previous swing low here around the 82.92 level, and we'll be looking for more downside here as well. So we're just consolidating more on Brent and WTI. I'd say really out the energies, natural gas is definitely the one you want to be watching today. Moving over to gold, so this will certainly be a very active market as we go into FOMC next week. We want to keep an eye on this. We have had a pullback from the recent highs here of $1,255 an ounce. We can see here that we are starting to develop a little bit of support around the 1230 zone. There's a bit of a hammer starting to form on the daily. Often volatility for gold does tend to reduce prior to the FOMC statement. So we've got the FOMC on Wednesday. It's certainly going to be a great trade opportunity. I'll talk about that a little bit more, about how you can actually trade that live with the Gold and Silver Club. But at the moment, at the daily time frame, we're getting a little bit of support around this zone. You can just draw in a trend line here. You can see the support zone holding at the moment. So we're looking just for a potential support around the current levels, 1230, and a little bit more upside as we go into next week if that confirms. The US dollar index has been putting pressure on gold. We saw a recent breakout the last couple of days. Again, the volatility was quite reduced on the US dollar yesterday. We'll be looking for a breakout either above this key resistance zone above 86 or a break just below the lows here of 85.75 for the next move here. So we'll be looking either for just a retracement back down to support or a breakout above resistance, which will inversely affect gold. Also looking at palladium, you can keep an eye on that on the higher time frames. Palladium has found some support around this key trend channel. It's been in place since 2012. We really, in order to get any more upside here, we'd like to see a break above really 800 US dollars an ounce here. So that's the key level to break above for palladium at the moment. Silver continuing to consolidate. Silver daily volatility is not great at the moment. So we're waiting really for a new trend to develop. If we come down and we take out the key level of support here at 1666, we'll be looking to break 4-year lows, and we'll be looking for more downside. If we get a break above the highs here, we can start building a bit of a base. It really needs to break above 1782, which may happen if it's going to happen, it could happen on the FOMC next week. But we'll be looking really for trade opportunities in either direction. But today's volatility quite reduced there. We'll just have a look at the platinum market as well. So platinum's still looking fairly bearish here, although we are developing a bit of a pennant here. You can see that we're getting higher highs on the daily, but also we're getting lower highs, so we're getting higher lows and also lower highs here as well. You can see the pennant formation which is developing, and we've got a little bit of reduced volatility on the daily here as well for platinum, really awaiting the next move. And of course FOMC often gives us a lot of good trade opportunities. That's what we're going to be awaiting next week for the next move on platinum. Also copper just following a very strong trending channel. We're looking for a move, a rotation just back up to the upper end of this trend channel in the short term here. So we're just looking for a bounce just back up to the resistance here, 3.0664. So that's the next key level of resistance for the copper market to come to, and then we'll be looking to take advantage of just a continuation of this downward trend. A lot of confluence there on the higher time frames as well. So that's what we're looking for on copper. Be interesting to see how we close on the daily here as well. There's a potential setup here as well, just on the daily. So we'll be keeping an eye as to whether this is going to give us a sell short. So that's a good one to watch today as well. Moving over to the grains, we've had some really good moves on corn and wheat this week, which we've caught the breakouts. You can see actually corn starting to break out from resistance here at 360. It's certainly on the move, so corn's a good one to watch. Next key level of resistance is going to be going back on the charts to August and July here. So this resistance zone around 370 is the next major area. So we're looking for about another 80-point move up to resistance here on corn. Looking good if you're in corn long at the moment. Looks like we'll get a continuation. Also wheat having a splendid move here as well. Next resistance really at 537. We've caught some great trades on wheat this week. We're just looking for really a continuation of this upward trending channel for wheat for the time being. So that's what we'll be keeping an eye on right now for the wheat market as we continue to follow this trend channel, and next resistance at 537. Okay, so that's really what we're looking at across the commodities for the time being. So really the top markets I'd say to watch, which haven't quite triggered yet, would be natural gas. Just need to get a breakdown here, 3.674, to really get some additional momentum to the downside. So we can see that that's definitely going to be one to watch today. Okay, let's just go through the major announcements as we go into next week as well here. So we'll just take a look at the major news which will affect the commodities. So the week ahead key events looking forward, Monday the 27th of October at 3 p.m. BST, 10 a.m. Eastern time. We have the US pending home sales. So the National Association of Realtors, NAR, pending home sales report measures the change in the number of homes under contract to be sold but still awaiting the closing transaction, excluding new construction. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. On Tuesday the 28th of October at 1:30 p.m. BST, 8:30 a.m. Eastern time, we have the core durable goods orders. So core durable goods measures the change in the total value of new orders for long-lasting manufactured goods. The core number gives a better gauge of ordering trends. A higher reading indicates increased manufacturing activity. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Tuesday the 28th of October at 3 p.m. BST, 10 a.m. Eastern time, we have the US consumer confidence. This is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher readings point to higher consumer optimism. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Wednesday the 29th of October at 3:30 p.m. BST, 10 a.m. Eastern time, we have the US crude oil inventories. That data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms, of course, report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Wednesday the 29th of October at 7 p.m. BST, 2 p.m. Eastern time, we have the FOMC statement. This is a primary tool the FOMC uses to communicate with traders about the monetary policy. It covers in detail the factors that affected the most recent interest rate decisions, along with commentary about economic conditions such as the future growth and outlook and inflation. The statement followed by a press conference with Janet Yellen. The question often leads to unscripted answers that create heavy market volatility. That's a major one for your diary as we go into next week. And of course, on Thursday, the 30th of October at 3:30 p.m. BST, 10:30 a.m. Eastern time, we have the US natural gas storage inventories. So the Energy Information Administration, they provide the natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So a higher than expected reading should be taken as bearish for natural gas prices, while a lower than expected reading should be taken as bullish. Okay, brilliant. Right, good question, George. So George just asking whether we'd be bullish or bearish silver. So let me lead you on to that. So essentially, we will actually be trading the FOMC live with all of our traders at the Gold and Silver Club. At the moment, we'll be essentially waiting on that FOMC statement to come out to give us the next direction for silver. So prior to the FOMC, you want to be lighter on positions and then really get ready for some big meaty positions as the FOMC announcement gets delivered, and that is a great trading opportunity, George. Okay, so if anybody would like to request information, no problem. If anybody would like to request information on the Gold and Silver Club live trading room program and daily trade calls, please go to www.jointhegoldandsilverclub.com, or you can contact us at our London, our New York, our Sydney, our Johannesburg, the Budapest office. So I'll leave those details on the screen for you very shortly. Of course, make sure you subscribe to our newsletter. You'll receive free weekly reports on the precious metals, energies, agriculture, as well as live market analysis and prices. So do make sure you take advantage of that as well. Okay, I shall leave these details on the screen for you all. I wish you all good luck with your trading, especially as we go into the FOMC next week. Look forward to hear from you, and we'll definitely see you on the next one. Okay, great stuff. Take care, everyone. Have a great weekend. Cheers. Bye-bye.